In this video, I'm going to talk about trading with the trend in a quick and dirty way that you're going to be able to not only identify the trend, but at the end of this video, I hope that you'll be able to make a more educated decision in your trading on whether or not trading with the trend is something you'd like to do, because I've seen in my experience as a trader that when trading with the trend, my win rate typically increases. So with that said, let's dive right into it. So when we talk about a trend, we can have an uptrend, we can have a downtrend. And maybe you've heard some traders find it easier to trade with the trend. But what does trading with the trend actually mean? Now, if you're looking at a chart and you're looking to trade a stock and you can see that the trend is very bullish, that means buyers are in control. But you're looking to take a short position, you're looking to bet on that stock going down. Well, now you are coming in as a seller and you're essentially fighting and pushing against all the buyers. The majority of pressure in the market or on that stock specifically is going to be against you. And so it just becomes harder to trade against a trend. That's fundamentally why it's harder to trade against a trend. So knowing that it's harder to trade against a trend, and then at the same time that typically based off my experience and a lot of traders I've spoken with, you will see an increased win rate when trading with the trend. How do we actually identify and really solidify when looking at a chart? What is the trend? Now, some charts are very clean and they're very clear. Take NVIDIA. Okay, a very, I would say clean and clear chart. We look on a 4-hour, we look on a daily, and you can see the overall trend is bullish, right? And some are very easy to see, like NVIDIA. But there's some charts that aren't so easy to essentially tell what the trend is. So we're just gonna go through some random stocks here, and then I'm gonna show you just a quick and easy way, quick and dirty way of identifying what the trend is. So moving averages, they essentially are going to give us the average price movement of that stock over a given time represented by a line. So we're going to add one simple moving average, and we're going to change this length to 200. We're going to change the color. Okay, this can be whatever, it doesn't matter. Now what you see is the 200-day, okay, SMA. You should have 200 and you should see simple moving average, and this will be close. If you're on Thinkorswim, it might look a little different if you're on TradingView. This is our quick and dirty way of identifying the trend and having that yes or no answer. Is this a bullish trend? Yes, because we are trading above the 200-day SMA. Well, this seems simple. This is actually going to allow you, when trading, to pull up a chart, apply the 200-day SMA, and have a very easy way, like I said, that quick and dirty way of seeing if your trade is going to be positioned in line with the trend or if you're going to be trading against the trend. Let's again come back to why this fundamentally is important, and why fundamentally typically what you'll see is that when trading with the trend, you will have an increased win rate. Let's say in this instance, we're trading CRM and we see bullish trend, we're trading above the 200-day SMA. Now, buyers are in control. There's a lot of buying power, and you're coming in and you're saying, I want to short CRM. I think it's going to go down. That's fundamentally why it's more difficult to trade against the trend. Now, what we can try to do is try to predict the highs and say, oh, I think it's going to turn around here. If you come in, you're trying to short this thing, you would have failed shorting it every day, almost for the last 2 weeks. You came in this day, tried to play against the trend. Maybe an intraday move, you could have caught a little downside, but essentially every day, this thing has continued to gap up, and it looks like we've started gapping up and increasing each day even further. Whereas if you had a long stance, a bullish stance, and you wanted to go long on CRM, you could see that trading with the trend, you would have caught, on potentially 10, 15, even 20% move on CRM. So this would have been a great trade trading with the trend. This would have been an awful trade trading against the trend. And you could say, oh, it's easy to say that looking, at what just happened over the last 2 weeks. It's already happened. We're just talking right in past tense. But if we were to zoom out, we can see here, when we were trading on the 200-day SMA, was there a clear trend? Like, we were neither able at this point to really dictate and say if the trend was bullish or bearish. We were just trading straight on. You could see the candles were trading straight on the 200-day SMA. And we were kind of pushing above, retracing, pushing above, pulling back, pushing above, pulling back, right? No clear direction. when we finally were able to literally break off that 200-day SMA and continue working up, forming those higher highs, breaking past obviously these previous highs, these areas of resistance that had been set, and we broke above really this 274 area, all of a sudden the tide has shifted. Okay, now we could say with certainty that the trend is bullish. We're trading above the 200-day SMA. We've broken out after trading like pretty much on it. A lot of chop over the last couple of weeks, taking a directional stance, going long on this chart, getting in with some calls, trading the trend. You would have seen a really, really nice move. If you didn't have this 200-day pulled up on your chart, you wouldn't have had that way of looking at it and identifying if that trade you were looking to take was going to be in line with the trend or not. And again, it's easier on some charts to see if there's, a bullish or a bearish trend. And then on some charts, it's just really difficult. Here's another example on ticker symbol OXY. What do we think here? Well, we've got the 200-day, and we can see that price movement has tried to break above the 200-day, pulled back, tried to break it again. Okay, rejected, pulled back. And you can see we've kind of continued to form these lower highs, lower lows into this low at 49.51. So having this understanding now, knowing, hey, it would have been really difficult if the trend here is bearish to actually try to go long, because the only opportunity you would have had to make money throughout the entire last 4, 5, 6 months would have maybe been one of these little bounces here for a day or two. You would have been up, but overall you would have continued essentially to have been pushed down. There's just too much selling pressure on OXY, right, in this case, and trying to actually trade against the trend would have been very difficult. Think about this concept. I want you guys to apply the 280-day SMA to your chart and begin going through charts, and hopefully within your trading, you can make a decision now educated on whether or not you would like to be a trend trader, whether you'd like to trade in line with the trend, or if you're still okay with trading against the trend now knowing how hard it is. Now, I hope you guys enjoyed this video. If you're looking to learn how to trade in the stock market, I will put a link in the description below to my mentorship group. You can click that link. You can learn more about what is included. And if you do join, I look forward to working with you. Subscribe for more, and I'll see you in the next one. Later.